Hello world, what's going on? I'm still trying to figure out this intro thing. And speaking to myself is still weird, but I only go 1,000%, and even though I'm still a little shy, it's gonna go full steam. So, thanks to the 32 people who voted to bring this content to you today. Couldn't have done it without your support and inputs. And also, thank you, whoever's watching. I hope you learned something today. So let's finance humans. So for my first topic, we're going to be talking about how to buy a home in Canada. So first up, I want to talk about the process. As with any process, you always want to start with setting a goal. The second being getting a down payment. So we're going to go over all of the nitty-gritty details that come with saving up for a down payment and what you should be looking out for, the numbers, and then we'll go into getting a mortgage and then paying off your mortgage. So first up, we have setting a goal. There are multiple sites that you can just Google. I just put down two that came to mind, point2homes.com and rue.ca. Find a home that you like and take its home price, and that will be your goal. So I just did a quick example. I went to point2homes.ca and then found this first listing for 500K. So we're just gonna make that our goal. So here we have the rules for minimum down payments. And this is really just the minimum amount of money that you need in order to apply for a mortgage. For those of you who are whizzes, number crunchers, I created this simple slide for you just so that you can get a 80-20 of what's going on, and I'll let you read it. But I really want to get into the nitty-gritty of the formulas. So, warning, there's going to be a lot of math. So buckle down. So for a minimum down payment, there are three tiers. One, home prices that are less than or equal to $500,000 in value, home prices that are in between $500,000 and $1 million, and home prices that are greater than $1 million. So for home prices that are less than or equal to $500,000, you only need 5% of the home's price. Multiplied 5% by 500K and you get 25,000. So for homes that are less than or equal to 500K, you approximately need $25,000 as a minimum down payment. In the second tier, we have home prices in between $500,000 and $1 million. It's 5% of your home price plus 10% of the remaining portion that is greater than 500K. In the example here, I have a home price and a goal of $700,000. I plug the number into the formula and you get $55,000 as your minimum down payment. Then for the last tier, it's really just 20% of the home price. 1.3 million home price multiplied by 20% and you get $260,000. So what are the perks for having a down payment that's actually greater than your minimum down payment? So a lot of people, when they hear down payment, the first thing that they hear is, oh, you need 20% of a home's price. And the reason why is because of the type of mortgage that you get based off of your down payment amount. So if you have a down payment amount that is greater than 20% of your home price, you get a basic mortgage. But if you have down payment of less than 20% of your home price, you have to get a high ratio mortgage where you basically have to pay insurance premiums on top of your mortgage. The amount of money that you save for a down payment and the percentage of your home price really dictates what type of mortgage you'll get. Oh yeah, I forgot about that. You probably want to get a down payment that is greater than 20%, because why would you pay more money? Because of the fact that you don't have enough money. But I really want to get into the mathematics behind why you should or shouldn't have a down payment amount that is less than 20%. So for those of you who don't really care, you could fast forward. For a high ratio mortgage, you have to buy mortgage loan insurance, aka you have to pay insurance premiums, which are just monthly payments on top of your mortgage. And the typical insurance rates vary between 0.6% and 4.5%. The rates vary depending on how much risk you pose of basically not being able to meet your mortgage payments, and that's determined by the insurance company or the lender. And so for a general rule of thumb, the lower your down payment amount is, the more riskier you are, and therefore the higher your insurance rate will be. So in order to calculate insurance premiums, you will multiply your insurance rate by your mortgage value. And your mortgage value is calculated by your home price minus your down payment price. So for this example, we have a home price of $500,000, a down payment of $50,000, and insurance rate of 2%, which is kind of like smack in the middle. It could vary. This is not the definite interest rate. And so you plug in the numbers, 500K home price minus 50K of down payment gives you a mortgage value of $450,000. And so your insurance premium would equal to 2% of $450,000, which is $9,000. And your rates will depend on your lender. You might have to get insurance depending on if you are self-employed or you have poor credit history, even if you have a down payment that is greater than 20%. And lastly, there are no mortgage loan insurance for home prices that are greater than $1 million, which will mean that you have to have 20% or greater. Here we're just going into more of the math behind why you probably shouldn't get a high ratio mortgage. So in the calculation here, in order to not get a high ratio mortgage, you have to have 20% down payment, which is equal to 100K in this example. So 100K minus 50K of our current down payment gives us 50K of room between our current down payment percentage and the 20%. So if you divide the 9K of insurance premiums that you would pay every year by the 50K that you need to save in order to meet the threshold of 20%, that's 18% of the remaining down payment each year that you're paying to insurance lender, where you could have just saved that amount if you, for example, wait an extra year to save that $50,000. Now, the average mortgage lifespan is around 25 to 30 years. So for a rough estimate, your total cost for insurance premiums could be approximately $225,000. And insurance premiums decrease as you pay off your mortgage. So let's call that the $225,000 as the max cost that you would have to pay. So now we've set our goal. We picked a house that we wanted. We have a down payment amount of 20%. And now we're wondering, how do we get there? And so I set down this framework to break down that 100K into weekly goals. And so I always like to start with this quote where I say, I want to buy a house in X amount of years. You want to break up the down payment into daily, weekly, monthly, and yearly goals. So that way you can track how you're doing each week or each month to see whether you're actually on track, or maybe it's going to take a bit longer. In this example, I want to buy a house in 5 years. Now we have a down payment of 100K. So our yearly goal would be 100K divided by 5 years, which equals to 20K per year. Now our monthly goal will be our yearly goal divided by 12, which will equal to 1.6K a month. And then we have our weekly goal, which is our monthly goal divided by 4, which is equal to $415 per week. So I need to save $415 a week to set aside for my down payment to buy a house in 5 years. And if you need help tracking spending, you can watch my first video I posted yesterday. Congratulations, you're now at the point where you can apply for a mortgage because you've saved up $100,000 of down payment. You can find different mortgage rates either at a website called Rate Hub, or you can just visit all of the 6 big banks' websites to see what the most competitive rate or maybe what your current bank is offering, and you just apply. And I'm not going to go into the details of the application process in this video, but if that's something that you guys want to dive into, then let me know. Congratulations, your mortgage just got approved. You signed the contract, and now you are well on your way to your next adventure. The last part is just paying off your monthly or weekly payment schedule for the next 25 to 30 years. So good luck. So that's all, folks. Thanks for watching. And I've always wanted to say this. Smash that thumbs up button, comment, and share it if you found this really useful. And you can follow me at my handle below, or you can submit topic requests at that URL.